What's up, YouTube fam? Welcome back to the channel. In this episode, we're going to talk about how we've done almost 5% in a single week, all from selling options. So I'm not going to waste any time. We're just going to go into the plays and discuss them, and I'll show you guys right now. So the first play that made us some profit we'll talk about will be these TQQQ cash secured puts, right? So here we go. We sold it for 428 and we bought it back here for 32. So that was on January 31st when we entered it. We closed it on February 3rd. Right now, let's get into the charts just so you guys can see what we were thinking. Now, ultimately, right, keep in mind, when it comes to these plays, we're really not trying to time the market when it comes to something like TQQQ. So let's just talk about when we entered this position. It was January 31st at 2:23 EST. So that's roughly around this time, right? So that's the funny part. As you could tell, you know, it was like the top of the market for the time being because obviously we took a huge gap down right after. But that's the beautiful part about selling puts, right? Where was our strike? Our strike was the 82.5. And by the next week, it was well above there. So, you know, it doesn't even necessarily matter if it goes up or goes down, right? That's something we always discuss about selling puts, why it's so great. Truth be told, it went down at first and then came back up. And that's usually what the market does, right? Even if it goes up at first, a lot of times it'll come back down, similar to something like this. So, you know, that's the reality, is like things like the NASDAQ, the SPY, they definitely do go up, but they spend a lot of time range bound. And that's why selling puts is great, because you get to profit if it's range bound or if it goes up. So that's one of the first trades we'll talk about. These leaps, right? I'm sure if you've been watching, then you know that we took leaps on TQQQ, and so many people commented, "Oh, Jared, what are you doing? Why would you buy leaps on a leveraged asset?" Well, think about it like this, right? You know, in the end of the day, you're still better off buying anything QQQ related than half of or 99% of the options that people buy. Not to mention the option itself truly matters, right? If you buy a 0-date option, it's probably going to expire worthless. If you buy something 2 years out that's so deep in the money, you know, it's probably going to expire profitable. Now, you know, I did close it just so I can take a different position we'll discuss, but I ended up closing that leap out for $100 profit. As you can see, purchased 42.23 and then sold it. Now, you know, I purchased the leap at roughly the same time as I opened these cash secured puts. And ultimately what I did was I sold covered calls. So the first covered call, I made 105 profit. Then I sold another one for 148 and I rolled it for $15 credit, which would make a number of 163. And then I ultimately bought it back for 405. So I ended up losing on the covered calls. I don't know the exact amount. I don't really feel like calculating, but it was basically a wash between profiting 200 at first and losing, I think, around 200. So the covered call leaps were a wash, and ultimately I do believe that strategy will be very good over the long term, and I do plan on leaping, probably not on TQQQ, but on SPXL, and we'll discuss that when I do it on this channel. I have the plan. I'm just right now in other positions. So I ended up closing that, right? So obviously, long story short, you know, if you've been following this channel, you know that I've had TQQ puts open, two contracts, and then I had one deep leap and one covered call. Again, if you want, go back to 2 or 3 videos ago and you'll see what I'm talking about. Now I just have one TQQ put open, and obviously, as you guys see, I have 8 contracts with LIF. Now, basically, in between there, what also made us some great profit was Shopify, which if you watched yesterday's video, you would see I took Shopify for earnings just because it's a great company, right? It's a great company. I don't believe there's much competition. You know, their earnings reports, their revenue seems to be good. It's one of those stocks that I would, you know, go to bat for. Now, this isn't even the right chart, is it? Here, this is the right one. So yeah, if we look at their revenue, you know, it's just always increasing. And I discussed my reasons for the position in the last video. So if you want to learn or see why I took it, you know, go check it out. But basically, you know, we truly believe that selling cash secured puts on stocks we want to own anyway during earnings is really the best strategy, because you're getting high premiums on stocks you want to own. Otherwise, the only way you're going to get super, super high premiums is if you're getting in on stocks that you probably don't really want to own or are very risky. Like obviously when this earnings report was going to come out right before it did this, and I remember checking my phone. I actually just woke up and saw it, and I was like, you know what, I'm going to go back to sleep And sure enough, when I went back to sleep, we were up $400 profit. So I ended up taking the profits, as you can see, sold it for 570 credit, bought it for 165. The total profit was 405. Now, obviously, if I held, right, we can check where that option's at right now. So let's see. It was the 116. So yeah, obviously if I held, I would have made an extra 130. But I was concerned that Shopify might do one of those, earnings reversals. I just didn't care enough, so I took the 405. Obviously, yeah, if I would have held, through the end of the day, I would have made an extra 130. Instead, I went and took this Lyft cash secured put. Now, ultimately, the Lyft position was the same thing, right? We had earnings, which obviously, as you can tell, it didn't go necessarily the way we want. And this is good because this is the type of stuff I want to show on this channel. I want to show the raw reality of selling options, especially during earnings. Now, obviously, if we look at the simulator, it's not going to look pretty right now, but I'm not worried about it, right? I know Theta is going to do its thing. I know the IV is going to absolutely fall over the next couple days, which is going to make the premiums deflate. So I'm not entirely worried. Obviously, this isn't the outcome we had hoped for. We had hoped for Lyft to do really what DoorDash did, which, that's the annoying part. Is the only reason I didn't take DoorDash was because my account didn't have enough to do DoorDash and keep TQQQ open, and I really just never want to close this. I want to always be rolling a TQQQ cash secured put, at least one. Obviously, the real strategy is multiple, but I didn't do DoorDash for that reason. Is like I felt like I couldn't afford it with this account size, which is why I've been considering adding more to this account. Obviously, I started with 20K on November 7th, right? And, it's been a very uphill battle, but I feel like I've started to get down what's right and what's wrong, a strategy that I believe is going to work. And now at this point, the only thing that feels like it's limiting me is the capital. So I am definitely tempted to do that. What do you think? Let me know in the comments if you think I should add more capital to this account so I can take plays just based on, what I actually want to take. Obviously, you can say it's luck, right? That ironically, DoorDash missed earnings, right? While Lyft beat earnings. So you can say it's all luck, and maybe it is, but the point is I wanted to take both plays, and the only thing that stopped me was the capital. Obviously, had I taken both, I'd be in a winner, and I would not call Lyft a loser, right? There's multiple reasons why I wouldn't call it a loser. First of all, is we are still above our break-even price, right? So we're still technically in profit by expiration. Second of all, this can very easily bounce, and if it gives us a strong bounce tomorrow, I'm 100% going to look to take profit because I would like to play Robinhood earnings. Honestly, Robinhood along with Shopify are two of my favorite stocks. Coinbase being right there. Crypto doesn't look incredible, but I was looking into DraftKings financials and it's looked great. The chart has looked great on DraftKings. Now, let's just to show you guys, if we go and zoom out. Now, I like to look at the monthly. Before I took the Lyft position, I took the monthly as well. But yeah, this monthly chart looks about as bullish as you can want, right? We bottomed, created an uptrend. Bears tried to bring us back down, and now it just looks like the uptrend is continuing. There's really nothing bad you can say about this type of chart. Ultimately, when you look at the revenue, even though it missed earnings, the revenue is still increasing year over year. I mean, obviously, we know that the future of gambling is looking bright, whether it's good for the public or not, right? Whether more lives are being helped or more lives are being ruined. I just don't think the government is going to pass up on those tax dollars. And I just see more places legalizing it because of the tax revenue it can bring in. So DraftKings is definitely something that I'm watching for earnings play. And another one would be Airbnb. But before I look at that, I want to show you Lyft, just to chart one more time. What I saw on the monthly was just basically a bottomed out, right? Uber, listen, I get it. Uber is a lot bigger of a company than Lyft. They have a lot more going on. But the chart is extremely bullish. And I do anticipate Lyft eventually following. Now, even if it didn't follow, my thoughts was that we just can't go that much lower. Now, obviously, I could be wrong, of course, right? It can always go much lower. But I just saw it as a good risk-reward type of position. Now, I do usually like to stay away from these types of charts and look for things more bullish. But in this case, it just looked like a bottom out. And I just didn't believe that earnings would send it down. Now, obviously, this is down. But if we come back up, then our premiums will be back into profit. And this position will be a winner. So we'll see, right? Like I said, I like that this happened. I want a chance to prove myself in front of the audience, right? That we can manage positions when they don't go our way. In terms of Lyft revenue, it's still increasing year over year, right? Things that we like to see. So overall, I'm not worried, even if I had to wheel it for a week or two, which I still truly don't even see happening. The only thing that might upset me is if I don't want to get out of the lift position and we miss Robinhood. But, you know, obviously the market in general and Robinhood had, you know, some bearish movement today. Now, you know, to me, I just don't see anything stopping this Robinhood chart. Like, obviously we came down, and just like that, we're coming back up, looking great again. So yeah, the last chart to pull up is Airbnb, which is probably going to be one of, if not the last earnings play I play for a bit. I do believe Nvidia. Yeah, I don't really see myself doing anything this week with earnings. So something like this week, I think we'll be fully back into TQQQ, and then with an SPXL alteration, which again, make sure to subscribe, make sure to follow to see what I'm talking about, or go back 2 or 3 videos, just again to see what I'm talking about. And then in 2 weeks, I believe we have Nvidia, if I'm not mistaken, and this will definitely be an earnings play that we'll have to consider because, you know, it's just Nvidia, right? Again, there's nothing better than a stock that we really want to be a part of during earnings, in my opinion, for an option seller. And that's what I love, right, is because the general public thinks the opposite, right? They think there's nothing better than buying options during earnings. And as you guys probably know, if you're watching this channel, you probably know the general public is usually wrong, right? So those are all the trades we took. Those are all the ideas. If you want more, you know, live, you know, if you want to be able to talk to me, you know, on the regular, then obviously join the Discord. Right now we're at 200 members, so I'm very close to actually capping it. I don't know when to be exact, but definitely make sure to join before, because I do plan on shutting it down. It is a free Discord. I never wanted to keep it open for forever. And truthfully, I remember when it was a wait list, people were signing up left and right. Since it's become free, not as many people are joining. So I'm like, you know what? I'd rather just close it down, stay true to my day ones, and keep it from there. So if you want a way to be able to communicate with me regularly, definitely join the Discord. I've been posting all my plays. Obviously, this lift play, you know, you're probably thankful you missed out, but that doesn't mean anything, because in the end, we're still profitable since we started. We're still winning, and I do believe in the future we're going to be winning a lot more than we will be losing. So I hope you learned a little bit, see how we've actually been able to do 4% in a week. You know, it's funny because when I go on Twitter and I see option sellers, a lot of them are very, I guess you can say, quote unquote, responsible, praising that you can do 2, 3, 4% a month. And I'm just like, guys, I've done 3 to 5% a week many times as an option seller at this point. You know, I just think that you can do bigger. You don't have to do the numbers I'm doing I don't think, listen, I'm obviously not averaging 20% per month since starting. I'm only at 10% total. It's been about 3 months. So funny enough, I actually am averaging about 3% per month since starting. But I've also made some insane mistakes that I really just don't see happening in the future. And I don't see, you know, I just truly don't think that I'm going to be stuck at 3% per month. Obviously, you know, whatever happens, happens. If I could do 3% per month, I'm not going to be mad about it. But I just truly believe you can shoot much bigger. And this is my first 3 months. That's the thing. I'm doing 3% per month in my first 3 months. I anticipate the next 3 to be much better. Because that's the thing, guys. We're just learning. And that's ultimately why I started this channel. Because I rewatch these videos the same way Tom Brady would watch film, right? If you're a professional athlete, you watch film. I make these videos as film. I rewatch them. I learn from them. And don't make the same mistakes. So I hope you're able to learn from my mistakes as well. And you don't make the same mistake twice. I hope you learned a lot, you know, just whether it's from this video or if you've been watching me since the beginning or maybe just over the last couple weeks. I appreciate every single one of you, and I will see you guys in the next video.